Hey guys, Pup of Wall Street, and today I'm going to be revealing my portfolio. I have it with Robinhood because I love Robinhood. They're super simple. They're great for new investors like me. I just love them. Everything about them. They're fractional shares. How easy it is to navigate everything. I just love it. I love it. I don't have many bad things about it except the fact that I can't like trade options on it and stuff. But if they add options for people with professional status, because this account is not under my name because I'm too young to have my own account, the person whose name is under it does have professional status, so I'm not allowed to trade options on it. I wish they added that. They should add fractional shares for everybody. I know I have it, but I know there are people who don't have it, and I love the feature. I love the whole DRIP program and dividend reinvestment, and I just feel bad for people who can't do that, and I think they should really add that there. Customer service needs to be improved, but besides that, I love them overall. They do no commissions. They're completely free. You don't have to deposit a certain amount and you get a free stock. If you want a free stock, now you could get a free stock by using my link down below. I'm going to put my Robinhood link. You click on that, you sign up. You don't have to deposit anything. You just sign up and you get a free stock. No minimum deposit limits. You don't have to pay anything. It's just a free stock. And say you don't want to get into investing just yet, which I think you should though, because compound interest, obviously. But say you don't want to, you could just sell the stock, keep the money, the free money that you got, and just continue saving or whatever you do with your money. Alright, so right now I'm down $19 today. We've had a pretty hard dip right there. The week, I'm up 150. Month, I'm up almost 400. In 3 months, I'm up $971, and on the year, I'm up 169, and same with all time. Now, I started this account about 5 to 6 months ago in mid-March. Right now, it's up a total of 34%, or 1,170. Just this week, I'm pretty sure I passed $1,000 in total return, and it's totally because of Apple. They did announce a stock split, 4-1, or no, 4-4-1. All right, so you get 4 stocks for every 1 share, 4 shares for every 1 share that you own. So yeah, it's worth $4,557. Most of this money comes from my bar mitzvah. I decided to save most of it. Then I learned about investing, and I'm like, I gotta do this. So I still have $3,000 in savings, but I have 1,170 of this isn't mine. I also wash people's cars, and I get money from that. I get money every week from that. I get a very small amount of money from chores that I do for family. But really, that's it. That's how I built up this portfolio. Yeah. So now we're going to look at my positions. My first one is obviously Apple. This is my largest position in the entire portfolio, worth almost $900. I am up 76% on it, which is 380, almost, it's so volatile right now. There's so much volume. All right, let's just call it $390. All right, they're pretty down today though. You can see they really spiked because of the stock split and great earnings and stuff. I got it at an average cost of $252. They're at $446. I have 2 shares, so that means I have a bit over 2 shares, but that's such a small amount, so the 0.002786, that doesn't matter. So let's call it 2 shares, so I'll be getting 8 shares. I'll be getting 8 shares, yeah, basically. This makes up almost 20% of my portfolio, but it's not because I put in a ton of money. I only put in $500. It's because it just growed so much growth. All right, we're going to go on to the next stock, which is, how do you use this? I'm not super used to Robinhood on the whole computer thing. I usually use my phone to check everything. My next biggest position is Microsoft, so I am pretty heavy in the tech industry, but that's okay with me because of how much they're going up. I have a $640 position in them. I paid about $531. I'm up 20% or $100. I did, but from both Apple and Microsoft, I have gotten a dividend. My average cost is 176. They're at 212 right now. I plan on holding both of them forever, Microsoft and Apple. Yeah, I love them. I'm literally gonna hold them forever. I mean, this growth is incredible. All right, next stock. I wish I had a better way of getting to the next stock. Now this is NextEra Energy. I mentioned this in my how to invest in renewable energy video. I do put my money where my mouth is, and I bought I did buy 2.1 shares, 2.2 shares almost. It does make up 12% of my portfolio. I'm up 23% or $110. My average cost 234. It's at 289 about. COVID. Um, yeah. My market value is $582 into NextEra Energy. What they do is they build their own solar energy, their solar like power plants. They do solar and wind, but they primarily do solar. You could actually see if you look up NextEra Energy, they do have a plant in California, in Southern California. You could see on Google Maps, which I think is cool. It's always cool to see the companies that you invest in. It's pretty cool to see where they're located. But yeah, they distribute the energy. They don't distribute the solar panels and stuff. They build their own, but they distribute the energy that comes from them. All right. Next is Salesforce. Now this is the first not dividend stock. So they don't pay dividend, but I just have them as growth. I like the whole idea that Mark Benioff had, the CEO of Salesforce, where he wants to like get the revenue up like a ton. So I'm just going to hold them for a bit. I kind of wish they paid a dividend, but it's okay. They're growth. I'm up 26% on them, which is $83. They make up 8.89% of my portfolio. I know I have so much in tech. I have a lot in tech. It makes it like 50 something percent of my portfolio, but I'm trying to put more into different stocks. And well, I do have a lot in ETFs too, but I'm trying to get out of tech. I love tech though. So yeah, that's Salesforce. My average cost is 321 or sorry, 159. It's at 200 right now. Next stock is probably one of my favorites. I got Waste Management. I have about 3 shares of them, 3.2 shares. My average cost is $99. They're at 112 right now. I'm up 13.89%, which is $41. And I love them. They consistently grow in the long term. I love their dividend. I'm pretty sure they're a dividend aristocrat. If you don't know what they do, they manage waste. It's literally their name. It's not that hard. They make up 7.5% of my portfolio. What I like about them a lot is that they do recycling, which I think could be really big in the future. I think that's like a huge industry, and they're like one of the leaders in it. So yeah, I also mentioned this in my $100 dividend portfolio. This was one of the stock picks. We're going to go to my next stock, which I'm pretty sure is one of Warren Buffett's favorite, Coca-Cola. Now, their business is super simple. I love that about them. They make up 4.3% of my portfolio. I have a bit over 4 shares. I'm up 5.95%, which is $11. Yeah, I bought them at an average cost of $45.30, and right now they're at $48. So yeah, this is a growth stock. I do it for the growth. They do have a dividend of 3.43%. I probably should start showing the dividends of all them, but yeah, they have a higher dividend. They have a pretty high dividend. This is another stock that I'm just going to hold forever. Just live off the income, hopefully one day let the compound interest accumulate. Another one I'm probably going to live off forever. This brings me into the financial sector and insurance, Aflac. The Aflac duck, I also put this in my $100 portfolio, my $100 dividend portfolio. So I'm up 10%, average cost $32, and they're at $36 right now. They make up 3.2% of my portfolio, and there's not much to say about them. They have a high dividend like Coca-Cola, a bit over 3%. I don't go for high dividend yields, although this one is pretty high too, but it's not as high as like 8%. Like a lot of them, a lot of like. I like growth. I like getting onto my Robinhood portfolio, clicking on all time, and seeing that upward trend. I love that. So that's why I invest in there into the growth. I don't search for high dividend yields. I look for safe companies like Aflac. All right, the next one's a growth stock of Vivint Solar. I got them. This one was one of my best plays. I got them in average cost of $5.60, and now they are at $24 a share, 341%, which is crazy. I wish I put more money into them, but you could say that for everything. I'm up $95 on them, and they have no dividend. They're a solar company, but they are getting acquired by Sunrun, which I mentioned in my how to invest in renewable energy video. So yeah, they're getting acquired by Sunrun. I can't wait for that to happen, but that's probably why their stock price shot up. I'm glad I got this one before they did, because I love Sunrun. They just passed Tesla. So basically I think of this as I don't own Vivint Solar, I own Sunrun. Next one is another one that I got before a spike, Plug Power. I got an average cost of $4.31. It's at $11. So that's they make up 2% of my portfolio. I have about 8.5 shares, and I am also up 156% in this one. I got $94 worth of them. Yeah, I got them before their spike too. They also just had a second spike, which I'm pretty happy about. Vivint Solar is going to get acquired by Sunrun, so I'm going to hold that one long term. I'm also going to hold Plug Power long term. I'm not going to sell, even though they did have these big spikes. I know people are going to say, take your profit, dude. It's a long term hold for me. I really believe in renewable energy, and this like diversifies my exposure to the renewable energy because they do hydrogen power. All right, you can see I love renewable energy. Next one is Hannon Armstrong Sustainable Infrastructure Capital. So they do sustainable infrastructure. I love them because they help support the renewable energy sector. I'm up 12% on them, which is only $8.50. They make up 1.6% of my portfolio. I only have 2 shares. I'm definitely expanding this. They also give out a dividend of 4.65%, which is really nice. I love it. They're going to grow in the long term, I think. They're just a hold forever stock. I hope they do well. They kind of follow the renewable energy industry too, the whole renewable energy market. Next one, Inseego. I did get this one during the spike, I think. I'm not a big fan of hype stocks, but if I got the hype stock before, I don't buy into hype stocks. I don't buy stocks after they've been hyped up or during the hype. But yeah, I got this at an average cost of $9.78. I got them right about here. But yeah, I'm up 22% on them. They make up 1.5% of my portfolio. I have 6 shares. They don't give a dividend yield. They're in telecommunications, by the way, which is another tech thing. So yeah, oops. Next one is NIO. I also plan on holding this one. So there are 2 things I'm hoping that happens. They just IPO'd. They just had a spike. I am up another big one. I have 5.3 shares. I'm up 369%, which is $55. I got an average cost of $2.86. They're now at $13 freaking dollars. Holy crap. But yeah, they're like Chinese EV company. I like them because they were one of the EV companies that like made money. Them and Tesla are the only ones that really make money, I think. That's why I love this one so much. Kind of like a hedge against Tesla, if you want to think about it that way. But yeah, I'm up a lot of money. They don't have a dividend. Obviously, they're an EV company. I got them before the EV hype, which I'm really happy about. Next one is Realty Income. Now, these ones at the lower end. So, at first, I was investing in growth stocks because I was told to do that. But then I learned about dividend investing, and then I really been loving it. So yeah, I've been putting a lot of money into these dividend growth stocks because I love growth. I love growth. I love seeing, yeah. When I'm retired, I hope I could sell these or just live off the income. But in case I do have to ever sell these, I hope to sell them for more than I paid for. So yeah, this is a monthly paying REIT. I'm hoping to sell every REIT and just put it into this one REIT. They are heavy in the retail sector, but that's okay. I'm not up that much, but I am getting a dividend of 25 cents for my a bit above one share. I plan on buying more shares. I know you're starting to get to the one share company. Yeah. They just buy real estate and they give me some of the profits. One of my favorite things about this one is their earnings. I don't know if it'll show their earnings. Yeah. It consistently increases. It stays pretty consistent even during the pandemic, which I love because that means they're good with their money. They also, unlike a lot of REITs, they also grow in the long term. Yeah, love them. Let's go to our next one, which is Royal Caribbean. I am going to be putting more money into Royal Caribbean too while they're really low. They used to be a dividend stock. I'm not sure if they're going to pay their dividend anymore. But yeah, it still says that they have a 4.7% dividend yield, but you don't know with Robinhood, their dividend yields can be off. But yeah, they do grow in the long term. I know it doesn't show you on the really emphasize it on the 5 year, but if you ever look at their all time, you'll see they're totally undervalued in my opinion, which is why I'm going to buy more. I think eventually they'll recover as long as they don't go bankrupt or anything during this pandemic. Got an average cost of $34. They're at $51 right now, so that's 50% return. They make up 1% of my portfolio. So yeah, I plan on buying more. Next up, we got Tesla. I don't have much in Tesla. The reason is because I got it during the hype, and I didn't want to put a ton of money because it could have been overvalued at that time, which it wasn't because I'm up 40% now. I got an average cost of $1,020, and now it's hit $1,400. So yeah, I'm probably going to expand this because this is a great long-term growth stock, I think. And what I'm hoping is, best case scenario, they hopefully buy out NIO, and I get some shares of Tesla instead of my NIO shares, or NIO just becomes nice and big. And hopefully they paid it's normal for EV companies to pay out dividends. I hope that's a thing. Please. Next up, we got Main Street Capital. I just bought this earlier this week because, like I say, I put my money where my mouth is. I put it in one of my videos. I recommended it in one of my videos, so I was like, alright, I guess now I got to buy it. So I bought a share. I'm actually going to plan on buying more because I love it so much. But yeah, they pay monthly dividends. They have a pretty high dividend yield too, of almost 8%. I got an average cost of $30, which is around which was what it was around Monday, I'm pretty sure. Yeah, so it was around $30 on Monday. I got it around here. I'm happy with this. They pay their monthly dividend. I'm going to put more into this one. They're a BDC, by the way. I'm pretty sure in my other video I said they're a REIT. They're not a REIT. They're a BDC, which is like an investing company. They invest in stuff and give out most of their profits. They're similar to a REIT. Alright, next is IVR. I plan on totally wiping this position. I hate it. I hate it. I hate it. It's such a small percent to such a small amount of money, but I'm down on it. I did get a dividend from them, but now that they lowered their dividend, I'm just waiting on them to maybe go up a bit so I can sell them for less of a loss. But yeah, you can see that their earnings were so horrible, so terrible. I'm sure they went down. Yeah, you can see right here they announced their earnings, and people are like, "Holy crap, that was bad." I just don't like them. I'm not a big fan of REITs because they don't grow as much as I'd like them to. It says their dividend here it's wrong. It's really somewhere around 3%, not 46%. But yeah, I thought maybe they'll go back up to $16, $17. No, I don't think they will. Now that they lowered their dividend, they're not worth that much to a lot of people. I do feel bad for the people who bought it here, though. But yeah, I plan on selling this position. Next up, we got MFA Financial, another one that I was like, oh, it must go back up to take a recovery. Now, I'm going to hold them for a bit longer. I see them as a growth thing. They did cancel their dividend, even though it says 30% dividend here. It's not. I'm up 48% on them, which is 8%. I got them at an average cost of $1.87. Is it $2.77 a share now? I have 9 shares. I'm gonna hold them for a bit longer than IVR. I just want to get IVR out of my portfolio. I think they have some more room to grow before I sell, because nobody knows now that they don't pay a dividend. They're just growth stocks, so people are just with IVR. You're not getting as much for your money, basically. Sabre, I bought this. This was one of the first stocks I bought. They are a dividend stock too. I have 2 shares at an average cost of $4.45, which is nothing. I'm up 71% on them. They have a pretty high dividend, though the dividend was suspended. They do go down. I don't know if I like them as much because they just go down. This is what I don't like. Even though you could chase high yields, but then you get stuff like this that just depreciate over time. So it's not even worth it to me. So yeah, I don't know about a long-term hold, but a long-term position. But this is definitely going to be. I don't plan on selling it anytime soon, but it's probably not going to be a long-term position. Next up, we got, where is it? Procter and Gamble. Now this is, I don't even have a share of them, but I'm like throwing money into this. I really want them. I really want Procter and Gamble. Is one of my biggest positions. They pay out. They're a dividend aristocrat. I could see them being a dividend king. I got them right before their ex-dividend date, so I'm getting an 8-cent dividend. They pay it quarterly. But yeah, I'm up $1 on them. I know it's only $30 into them, but this is going to grow. I'm going to put more money into them. I plan on putting like $5, $10 a week into them, hopefully. But yeah, they're a consumer staple company. Just love them. They own like Charmin. I think they might own Dove. They just do like Bounty. I'm trying to think. They own everything. Colgate, Oral-B. They own these like things that you have to buy. It's like a consumer staple. That's what it is. I couldn't find the word. All right, now we get into the ETFs that I own. First ETF that I own is SPYG. This is just an S&P 500 ETF. Nothing really special about it. I have $246 in them. They make up 5% of my portfolio. I just have them just in case I'm unable to beat the market a couple years, because my goal is to hopefully make more than the S&P 500 does every year, which is really hard to do every single year. So I just have this in my portfolio to hopefully regulate it out if I'm unable to beat the market. Yeah, because I believe in the U.S. markets. They have a small dividend yield, but yeah, they're growth. Next one is, where is it? Defend, which is a triple leverage ETF. I just wanted to get into some leverage stuff. They're really undervalued, but I don't know, they probably won't make a full recovery for a while. But in the long term, I think eventually airlines will get back to buying more planes stuff. I only have 2 shares right now. This is going to be expanded. This has been suspended, I'm pretty sure, but they used to pay out a dividend of 2%. But yeah, I'm definitely going to buy more, even though it's above my average cost right now. I don't care. I believe in them. They have stocks like Boeing, Lockheed Martin, Raytheon Technologies. Those are the top 3 positions. Next one is YOLO. I'm also putting more into this. This is a cannabis ETF. It just follows the cannabis market. I'm up 14% on them. I did get a dividend from them also. Most of these stocks I've gotten dividends from already. I think about every one that has a dividend yield. But yeah, only have $37 in them, not much. But I am going to put more into cannabis. I feel like it'll be a big industry as more states legalize it. We got SPHD, which I'm also putting more. I'm putting more money into all these small positions, by the way, except like the REITs. I meant by the REITs, I mean everything except realty income. I'm putting money into realty income. No more MFA or IVR. I plan on selling those soon. I'm barely up anything, but I do get dividends from them. But eventually in the long term, I'll probably be making some profit. because they do go up in the long term, but not a ton. This position is Smog, or I missed one, but whatever. Smog, Fanic Vectors, low carbon ETF. Yeah, they just follow the renewable energy market. I'm up 30% on them, which is $46. My market value is $200. They make a 4.4% of my portfolio. They're about to hit $100. I don't know if they've already hit $100 before. Are they at all-time highs right now? Their 52-week high, I don't know. I didn't think so, no. They haven't hit it. Alright. So yeah, I mentioned this in my How to Invest in Renewable Energy video too. There's an ETF cover the whole industry. We got EDOW, which is First Trust. It's just a Dow Jones ETF. Just it's equal weighted, unlike the actual Dow Jones, which isn't. They do go up in the long term. Blah blah blah. I got them at an average of $21 or $24. This video is going by so slowly. Sorry. They make up 1.5% of my portfolio. There's Dow Jones. And I'm pretty sure this is my last ETF. Oh no, that was my last ETF. Alright. And now these are the two free stocks I got, Marathon Oil and Lexicon Pharmaceuticals. They're just free stocks. And yeah, that's really it. I don't plan on buying Morgan Stanley or VYM, actually. So that doesn't matter to me. Alright. Yeah, that's my portfolio. I hope you enjoyed. Thanks for watching. And I'll probably do I'll do a review on the dividends that I've made. I'm just waiting. I'm going to get another round of dividends starting tomorrow, because the first dividend I ever got was from Apple. And Apple, I'm pretty sure their ex-dividend date is today, so tomorrow it'll be shown in my portfolio. So I'm going to let that round of dividends come out. And yeah, I'll probably show all the dividends that I've gotten. So far I've made around $15 in dividends. No, probably a bit less. Probably like 13. But yeah, thanks for watching. I hope you enjoyed. This is a long-term dividend portfolio, and please do your own research when you're doing this. I'm not a professional. I'm not a licensed professional. I'm not a financial advisor. Please do your own research. Thanks for watching. Please like and subscribe. Use my Robinhood link for a free stock.